Assalamualaikum warahmatullahi wabarakatuh, and very good day to all my students. Okay, so previously we have covered 3 chapters. Okay, chapter 1 is the introduction to technical analysis. Okay, chapter 2 is all about the theories related to the technical analysis. Okay, chapter 3 is volume. Okay, and now we come into the chapter 4, which is trends and also price pattern. Okay, for chapter 4, okay, we will divide it into three subtopics. Okay, the first one is trends. Okay, second one is reversal pattern, and the third is continuation pattern. Okay, so for today, okay, I will cover the trend line, okay, and also the reversal patterns. All right, so first of all, okay, you need to know, okay, the definition of trend line. What is a trend line? Okay, so trend line is a straight line drawn on a chart through or across the significant limits of any price range to define the trend of market movements. Okay, trend lines are one of the first technical aspects of the market to be discovered. Okay, anything before we do the investigation or analysis about the price movement, about the pattern and so on. So you need to know, you need to understand, okay, what is trend line and how you are going to draw the trend line. Okay, so trend line, okay, you may read the notes given. Okay, so trend line consists of a series of successive waves, okay, with distinct peaks. This one is peaks and trough. Okay, so trend line must be a series of we call it as wave. Okay, all right. Okay, so you need to know, okay, the importance of trends. All right, so first, the benefits is it's not called benefits, but the need for understanding the trends itself. Okay, the first one is to identify, okay, the direction of the movement of the stock price. Okay, we need to know the direction of the movement, whether the trend the line is, the trend is uptrend or downtrend. Okay, number 2 is as a tool for trend confirmation. We need to confirm, okay, we need to confirm, okay, whether, okay, the movement is going up or maybe going down, or we want to decide, okay, whether there is a signal of buy or sell. Okay, and number 3 is to determine if and when the movement will change. Okay, whether there is a signal of a reversal pattern or maybe continuation pattern. So you need to know, okay, you need to understand, okay, the trend in technical analysis. Okay, we have 3 types of trend line. The first one is uptrend. Okay, and we have downtrend and also sideways. Okay, looking at this figure, okay, uptrend. Okay, this is uptrend when there are higher highs and higher lows. Okay, and this is sideways trend. Okay, basically sideways trends is about correction. Okay, correction, giving some time to make correction, and later whether the trend will be going up again or going down. So downtrend, okay, consists of a series of lower highs and lower lows. Okay, okay, you may look into this graph, okay, where we could see that, okay, the downtrend occurs, okay, in December 2019 until April 2020. Okay, all right, and then this top glove make sideways or maybe corrections, and later, okay, the graph, okay, is showing us the uptrend. Okay, so how you're going to draw the line, okay, you must draw for the uptrend, you must draw the line below, okay, below the closing the prices, okay, which is touch the higher low here. Right, for downtrend you have to draw the line, okay, above the prices, okay, and touch, okay, the higher low here. Okay, okay, so this is the explanation about the uptrend. Okay, uptrend line is whereby a line is drawn on the chart by connecting the low points of the security as its price continues to rise. Okay, each low point is successfully higher than the previous low. Okay, this progression gives the trend line its upward slope. Okay, for example, you look at this graph. Okay, all right, and then you look at this explanation. Okay, point 2 in the chart is the first high, okay, which is determined after the price falls from this point in point 3. Okay, and later, okay, we have point number 4, which is the second high. Okay, so this interpret us that the uptrend is exists. Okay, basically uptrend or downtrend, okay, we may look into the long-term period. Okay, okay, downtrend line is drawn with a line on the chart connecting the high points of the security as it continues to fall. Okay, each high point is successfully lower than the previous high. Okay, this progression gives the trend line its downward slope. Okay, so you may also refer to this diagram in this chart and also this explanation. Okay, okay, sideways. Okay, it describes the horizontal price movement that occurs when the forces of supply and demand are nearly equal. Okay, a sideways trend is often regarded as a period of consolidation before the price continues in the direction of the previous move. Okay, so for example, we look here. Okay, this one is downtrend and later uptrend, and they make some correction here. And later we will take a look into the how this price going, whether to continue with the previous move or make some reversal. Okay. Okay. We also may look into the trend line lengths. Okay. So we have long-term trend, intermediate trend, or a short-term trend. Okay. So basically, okay, short-term trend is last for 1 month. Okay. The short-term trend is anything less than a month. Okay. Intermediate trend. Okay. Intermediate trend is considered to last between 1 and 3 months. While long term is for the more than 3 months and basically longer than a year. Okay. So a long-term trend is composed of several intermediate trends. Okay, which often move against the direction of the major trend. If the major trend is upward and there is a downward correction in price movement, followed by a continuation of the uptrend, okay, the correction is considered to be an intermediate trend. So there is what we call some relationship between intermediate trends and also the long-term trends. What happened in intermediate trends may give the movement of the long-term trend. Okay. So this one, you may look into this trend line lengths. So this one is about the application of a trend line. And you may also read this valid breaking of a trend line. Okay, how they make validation on the trend line breakout zone. Okay. Okay, so these are the factors that determine the significance of a trend line. Okay, so the first one is length. Okay, the longer period will have far more significant consequences. Okay, meaning to say that the trend line that has been in effect of 3 months is more significant than one that has been in effect for 3 weeks or 3 days. Okay, so if we look into the longer period of time, okay, we may see that it is easier for us to analyze. Okay, it is what you call much easier, okay, to interpret what is going on, okay, for the last maybe 3 months or 4 months or maybe 1 year, and later we will make some decision on buy or sell. Okay, so the longer period is better, okay, to get significant interpretation. Okay, and then number of time it has been tested. Okay, the more time it has been tested or closely approached, the greater its significance. Okay, so for example, the trend line that has been successfully tested for 10 times is more significant than the one that has been tested only 5 times. Okay, and then the steepness or slope of the trend line. Okay. Okay, that is all about the trend line. So whatever it is, you must understand, okay, what is trend line, okay, what are the types of trend line, and also how you are going to draw the line, because okay, you may use, okay, this what we call this information, okay, from chapter 4 onwards, okay, in your assignment. Okay. All right. Now we go to the support and resistance level. Okay. So support and resistance, okay, represent key junctions where the forces of supply and demand meet. Okay. As we know that, okay, the price, okay, the stock price, okay, are determined by the supply and demand from the investors. Okay, we cannot simply we call state that the price will be like this or like that. Okay, because it will not follow the theories and also did not follow the EMH, which is efficient market hypothesis. Okay, if someone or a group of people, okay, have the tendency of setting the price, for example, so the market will be considered as speculative market, because people, there are people that easily, or we call manipulate the stock market. Okay, they have the what we call monopoly, okay, the market. So we don't want to be like that. Okay, so the stock price itself must be influenced by the supply and demand from the investors. Okay, so supply is synonymous with bearish and selling, while demand is synonymous with bullish, bulls, and buying. Okay, in an uptrend, okay, the line acts as a support line. When this uptrend line is violated, it acts as a resistance. Okay, remember just now we have trend line, uptrend, okay, and we have downtrend. Okay, remember uptrend, the price must be the line must be below the price. Okay, while the downtrend, okay, the price must be for uptrend, the price must be above the line, while downtrend, okay, the price must be lower or below the line. Okay, so when this uptrend line is violated, it acts as a resistance. Okay, so this one, okay, the below line, this one, okay, we call it as support. Okay, this one is support and this one is resistance. Okay, so if this one we call it as support line. Okay, if it's violated, which means there is some maybe breakout. Okay, so it will be turned into the resistance. Okay, and vice versa. Okay, so this one is this explanation about the support. Support is the price level at which demand is thought to be strong enough, okay, to prevent the price from declining further. Okay, so you may read this one. Okay, so yeah, this is example of support line. Okay, so you may draw, okay, the support and resistance line, and then you may interpret it in your report. Okay, so it must touch at least 2 or 3 points. Okay, and then you may draw, okay, the line below the price. Okay, okay, So a break below support signals that the bears have won out over the bulls. Okay, so indicates a new willingness to sell or a lack of incentive to buy. Okay. Now we go to the resistance. Okay, so resistance is the price level at which selling is thought to be strong enough to prevent the price from rising further. Okay. Okay, just now we look, this one is support and this one is resistance. Okay, so imagine that support is like something that you want to support from falling down. Okay, so the line must be below something that you want to support. All right, and for the resistance, okay, you have learned about economic, okay, about the ceiling price. So resistance is act as a ceiling line, okay, in order to prevent to measure and also to prevent the price from increase up further. But it is normal if the price break this line, and if the price break the line, okay, the resistance will turn to be a support line, and later you may draw another what we call this as a resistance line. Okay. Okay, so a break above resistance signals that the bulls have won out over the bears. Okay. Okay, so methods to establish support and resistance. Okay, so this one, okay, you may, okay, some technicalists, okay, they have their own way of uh, using what tools they want, they are interested, they are comfortable, okay, to use. For example, they might be use support and resistance, or pattern or indicators or mix of them, okay, to analyze the price movement. Okay, so in order to know how to analyze, okay, to decide buy and sell signal by using support and resistance, okay, this is an example. Okay, so buy at support and sell at resistance. Okay. Okay, so these are the role reversal of support equal resistance. Okay, you may read this one. And then this one also. Okay. Okay, so if price breaks below support, okay, then that support level become the new resistance levels. For example, this one. Okay, and then the price break out the line, and this support line will become as a resistance line, and you may find another support line. Okay, so once the support line break out against the line, so the support line, so it will become the resistance line, and it continues again and again. Okay, same goes to the resistance line. If the price break out the resistance line, so it will be known as support line. So you have to find another resistance line. So this is support and resistance is very important to understand, because this is very basic information. Okay, very basic skills. Okay, technical analysis skills. Okay, to make decision. Okay. Okay, so possibilities of once the price line break out the support or resistance. Okay, sometimes the price turn back to support or resist line, which creates, we call it as whipsaw, which is false signal. Okay, so this is the possibilities. Okay, if the price did not turn back to the support or resistance line. Okay, channels. Okay, channels is a price channel, is a continuation pattern that slopes up or down and is bound by an upper and lower trend line. Okay, so a bullish price channel will refer to a channel with positive slope, while negative slope is called it as bearish price channel. Okay, so under this channel, you may read about the main trend line and also channel line. Okay, what are the bullish price channel and also bearish price channels, and also scaling. Okay, so before we end our first subtopic, okay, there are also some additional notes at the end of the notes, okay, at the end of the slide. Okay, you may look into what are the definition of consolidation, divergence, okay, and then what is breakout, what is crossover, and also the difference between breakout and crossover. Okay, so breakout basically is about the price go beyond the line, and crossover is about when two line joining together and then cross each other. Okay, all right, so now we have end our chapter 4.1. Okay, about the trend lines, about the support and resistance. Okay, so now we go to the second subtopic, okay, on chapter 4, okay, which is patterns. Okay, this is price patterns. So for 4.2, okay, this is about the reversal patterns, okay, while for the next class, which is chapter 4.3, is all about the continuation pattern. Alright, so price pattern is a recognizable configuration of price movement that is identified using a series of trend lines and or curves. Okay, so basically technical analysts, okay, who use the analysis on the chart, okay, we call it as technical analysts or chartists, okay, have long used price patterns to examine the current movements and forecast the future market movements. So as I mentioned before, okay, each of the technical analysts, okay, has their own strategies and their own opinion about the tools that that they will use in order to determine the price movement. Okay, a chart pattern is a distinct information on a stock chart that creates a trading signal or a sign of future price movements. Okay, so chartists use these patterns to identify current trends and trend reversals and to trigger buy and sell signals. Okay, when a price pattern signals a change in trend direction, it is known as a reversal pattern. Okay, when there is a change in trend direction, okay, we call it as reversal pattern. While a continuation pattern occurs when the trend continues in its existing direction following a brief pause. Okay. Okay. So before we continue, okay, we'll look into the types of price patterns. Okay. First, we have reversal pattern. Okay, so these are the types of reversal pattern, which are double top or double bottom. Okay, triple top or triple bottom. Okay, and also head and shoulders tops and head and shoulders bottom. Okay, and then second is continuation pattern. We have pennants, flags, wedges, triangles, rectangles, and also cup and handle. Okay, and the other patterns are gap, island, inside, and also outside day. Okay, reversal patterns are those chart formations that signal that the ongoing trend is about to change the course. Okay, also referred to as a trend reversal or rally or correction. Okay, a reversal can be a positive or negative change against the prevailing trend. Okay, if a reversal charts pattern forms during an uptrend, it hints that the trend will reverse and that the price will head down soon. Okay, conversely, if a reversal chart pattern is seen during a downtrend, okay, it suggests that the price will move up later on. Okay. Okay, so we will continue to get to know in detail about the double tops bottoms, triple tops bottom, and also head and shoulders tops bottoms. Okay, what is double tops or double bottoms? Okay, double tops or double bottoms are reversal patterns that form as the price hits a support or resistance level two times. Okay, two times before the price turns around and moves in the opposite direction. Okay, opposite direction. Okay, that's why this is in under reversal. Reversal is opposite direction, kan? Alright. So double tops are bearish reversal patterns and double bottoms are bullish reversal patterns. Okay. Basically, double tops or double bottoms usually form over a longer period of time. So basically, this is for the intermediate trend until the long-term trend. Okay. All right. So this is the characteristic of double tops or double bottom. Okay. You look into this one. We put as A, B, C, and D for your quick reference. Okay. So A is for the resistance level. Remember this one. Okay. And then support level B. Okay. We want to support something, right? Okay. And then breakout C. Breakout because the price is break the line. Okay, we call it as breakout. Okay, the price projection. Price projection means that how long, how distance. This is the distance between the support and resistance. So these are the how long the price will go down, and then you need to do something before the price go further. Okay. Okay, so you look into this one, characteristic of double tops. Okay. Make sure that double tops must the top number one and top number two must touch the line. So that's we call it as double top. Okay, and then this one is the neckline. neckline. Okay, sometimes you can use neckline or support line. Okay, and then the breakout point, we call it also as entry. Okay, you may decide whether you want to sell or you want to buy. You want to sell. Okay, because this is bearish, right? So we have to sell. Or unless you hold the stocks, okay, you want to look what happened. Okay, if the stock going down further, you need to hold until the price is going up, and we don't know when the price will going up. Okay, this is for the bearish. Okay, for double bottom, this one double bottom. Okay, so the price, we call it as bullish. Okay, bullish reversal pattern. Okay, so if the line, if the price touch the line, the neckline ataupun or the resistance line, okay, we may entry. Okay, you may decide whether you want to buy or you want just look what happened. And then this is target, which is sometimes just now we call it as price projection. Okay, so this is one is target. The distance is between the support and also the resistance lines. Okay, so target. Okay, so this is an example of double tops or double bottoms in a graph. Okay, you may see that the point touch the line. Okay, the point, the top touch the line. Okay, all right. All right, now we go to the triple tops and bottoms. Okay, so triple tops or bottoms are reversal patterns that form as the price hits a support or resistance level 3 times. Okay, 3 times before the price turns around and moves in the opposite direction. Okay, so triple tops are bearish reversal patterns, and triple bottoms are bullish patterns. Okay. Okay, as we look at the bottom, double top and double bottom. Okay, so again for triple tops and triple bottoms also, we may look into this example. Okay. Okay, this one we have A, the resistance level, and then we have B, the support level, and then we have this C, this one, breakout point or entry point, and then also we have price projection or price projection. Okay. Okay, so we may look into this characteristic of triple tops and triple bottom. Okay, or again, okay, the point, the top point must touch the line. Okay, touch the line, right? Okay, if this the point did not touch the line, for example, this one reverse head and shoulders. Okay, this is not triple bottom. Okay, we call it as reverse head and shoulders. Okay. Okay, what is head and shoulders? Okay, head. Okay, shoulders. One head and two shoulders. And then we have tops and bottoms. Okay, so head and shoulders or HNS are reversal patterns that form as the price hits the resistance level. Okay, forming the first shoulder, then breaks through the first resistance level and hits a higher resistance level, forming the head. Okay, and then hits again the first resistance level again. Okay, forming the second shoulder. Okay, so vice versa for the bottom. Okay, so for the top, we call it as bearish reversal pattern, same as with the double and also triple tops. Okay, while bottoms, we call it as bullish. Okay. Okay, so you may look into this example. Okay, we have left shoulder. We have head here, we have we have right shoulder, and this one is the neckline ataupun or support line. Okay, and then E, this is the entry point, okay, or breakout, and this is the price projection. Okay, this one also you may read it. Okay, so this is the diagram of head and shoulders tops and bottoms. Okay, so you look the top here did not touch one line, okay, because the head one is bigger than the shoulder. Okay, all right, and this one is reverse. Okay, for the head and shoulders bottoms, we also call it as reverse head and shoulders. And for the top, okay, we call it as inverse. Okay, so you look at this one. This is from a real graph. Okay, and the price projection here, the measurement target here. Okay, so that's all for reversal pattern. Okay, so it is easier because reversal pattern just got only just same situation, same what we call the pattern. Again, easy to remember. Okay, so later during our next class we will continue with the continuation pattern, which we may look into various types of pattern. Okay, and then please remember and also understand, okay, master it, okay, about the trend lines, about the support and resistance, and also the reversal patterns. This is very important. It's very useful for doing your assignment for your company analysis. Okay, so that's all for topic 1 and 2 in chapter 4. Okay, so we may continue with chapter 4.3, which is continuation pattern. All right, thank you everyone for your time, and Assalamualaikum.